Hello, everyone. Let's take a look at a trade I made today. What I'm gonna do, it's a little bit different from my previous videos. This one is actually getting to the rules. I titled this video "Breakout in Target." I guess that is how how I called it. So give me 1 second. Let me double check. Yeah, breakout trigger. It's actually a trigger out of this compression or or channel that we do have here, right? So um, again, we do have the higher time frame in gold, which is an 8 setup in Renko, and then we have a 4 break, an 8 break with a 4 ticks in between them. Okay, so here is the trade. So market overnight since yesterday was going down. You see, so we have a top here, actually up here at let's see at around 11:30 p.m. and then right there at 11:30 at 1959.7, and the market overnight started to sell. So this is gold, right? So and the date again is 328 2022. So market started to go down, and then at 1 a.m. Oh, actually, this one is overnight from yesterday, right? And then you have here a March 28 that came right here. So market is, found some support at this level, came back up, and then started to make bounces below the EMAs, 289, um, um 34 and 21. So market started to make a bounce and then try to break out here at 3:27 a.m. Then bounced back up, made the cloud, and then we did have a week out of the cloud right here. So it came back down, consolidated again um, in this channel, and then came back and moved up. And then before the market opened today, so it was 5 a.m., started to move in this range up here, right? So from this high to this low to this high and to this low. So so market is going down, but has already moved significantly to the downside, and probably it's time for it to bounce back a little bit. So okay, so I created this channel, and I do have the Darvas here. So you see this here is a bottom, and then this one is another bottom similar to this one. So it's a double bottom, and then you have here a double top. So that creates a channel. You do have the market going in compression with moving to the downside, but significantly moving down. So up, down. Moving averages started to cross to the upside right here. So see, you do have now you have 89, um, 89, 34, and 21 moving to the upside above the cloud. But then you have the 200 right here up above, right? So, so I thought, okay, so if it's gonna break, this one is going to be a reversal, and it's going to be a break out of this channel. So I put the uh, stop buy order right one tick above this Darvas. And I saw it. Let me expand it a little bit so you see. Before that, let me go back a little bit to the 30 minutes. So you see that significant move to the downside, and then it started to consolidate, and then try to make a higher high above this value right here, right? So um, so that is what I saw. Now let me expand this a little bit now, and go to this section right here, so we can see the setup, the trigger, and the trade. So if you see here, if you see here, market the market, gold was coming back, make this double bottom, and then move to the upside. And then here, I didn't want it to go straight up because it could reverse at some point. This one should represent some reversal. So what happened in this candle right here, is that the market, I mean, it went back down, touched, kind of touched the 21, maybe the 18 would be better to call it, right? Because it was a little bit above the moving average right here. So it touched it and then went up. And then I felt more confident on it. So didn't take the trade before the trigger, but just at the trigger. A little bit of risk here because we do have the 200. So that is what I saw there. Took the entry at 1933.20, and I'm with this account, I'm looking for just to keep to take the target, right? So it's $400 right there. So 1937.20 is what the target was. Now kept moving all the way up. So then you say, okay, bummer, but that is a strategy. Only one target, and then keep it there. So move and probably this one has been probably um, 800 $1,000 maybe on that trade. Now then after that market open, so here you have in kind of like a yellow background. You do have here that the market would open, gold open at 820, right? So this one was even before the market did open the ghost bid for gold, but it was a really nice run all the way up here. Now market open, and this is the range of this red lines are the range of the 30 minutes. So you see that there's a little bit of range right here that break to the upside. Well, short-lived. Maybe you have to be careful because I already made a nice move to the upside. Then make a compression right here, and then went up, but it failed to meet that higher time frame. But you're looking for longs here. Then it came back down, and I'm not taking any more trades. So that's $400. That's it. I'm happy. Markets are a little bit choppy today, and probably they're going to reverse. But then broke out of these um, low in the 30 minutes chart, and then came back down, and probably that one would be a good entry as well. Okay, so that's the setup. So the setup is compression or channel right here. Market is moving sideways, and then the trigger is just one tick above that one. Now, you could have a bounce back, and then the only thing that you have to do is just to exit the entry and wait until it moves up again, and then you would get another opportunity to go there. So yeah, hope you like the video. This is a breakout trigger for a $400 target. Thank you for watching.